Welcome back to FT Markets. The slicing and dicing up of loans into packages of assets that could be sold to investors was one of the factors that led to the 2008 financial crisis. Then we were seeing the slicing and dicing of US subprime mortgages, which caused all the problems in the financial system. But asset-backed securities are back in fashion. The European Central Bank and the Bank of England want to revive ABS as a way of getting credit back into the economy to produce some economic growth. With me to discuss whether this is going to be possible or whether it's wise is Richard Hopkin, who's the head of securitisation at the Association for Financial Markets in Europe. Welcome, Richard. If we look at our first chart, which you've brought along with you, shows how securitisation since the crisis has turned into a dying industry. Is this something we should be welcoming or worrying about?
I think this is something that really does show a very worrying trend. As you can see, the volumes of securitization being issued in Europe has fallen from over 400 billion euros to just under 200.
We should just explain here the red blocks as RMBS, that's residential mortgages
Yes,
that have been
that's
packaged
right.
up. SME is perhaps the more interesting one for our conversation. That's lending to small and medium-sized enterprises.
That's
loans
right.
bundled up and sold, which is now a very small part.
Very small part, indeed, yes. So issuance volumes are down significantly, and in fact the picture is even worse than it seems here, because in 2009, of that 400 plus of issuance, nearly all of it was placed with actual investors.
It's sold in the markets, in other words.
Yes, absolutely.
Yeah.
And
the rest?
very little was taken up by the ECB and other central banks under repo schemes and things like that. Whereas today, unfortunately, the market remains still very dependent on the ECB repo schemes. So of this 180 billion or so here in 2013, only 76 billion was actually placed with investors.
The rest goes to the ECB because, of course, banks can bundle up loans and then
That's right.
repo them at the
That's
ECB
right.
and get money back.
Exactly. They do a securitization, issue securitization in the market, and then the ECB buys the bonds.
You're right. Now, the question is, are these things safe again?
Absolutely, and in Europe they've always been safe. If you look at the historical performance of securitizations in Europe through the crisis, from even before 2009, from 2007, if you look, for example, at prime residential mortgage-backed securities in Europe, the defaults on that asset class over the last 7 years have amounted to just 10 basis points.
And what's the big advantage then for economies of securitization?
Well, essentially, securitization is nothing more than a technique for taking pools of essentially illiquid assets like, you know, your mortgage,
yeah.
you know, my dentist's
my lending to a
loan
business.
from his bank that he needs to buy new equipment or whatever it might be, and taking those assets that are fundamentally illiquid and turning them into securities, which can then be issued and traded on financial markets, generating more cash.
All right. What's the key thing that's stopping that from being revived then? What's going to get it going again?
Well, a number of factors. Primarily, the regulatory response to the financial crisis, of course, has been quite tough.
Yeah.
Perhaps understandably so to some extent, because it's undeniable that what happened with the US subprime market was a disaster. But the problem is that Europe has been tarred with the same brush. As Yves Mersch of the ECB said towards the end of last year, in Europe the regulatory response has been a little bit like figuring out the flood defences of Madrid on the basis of the experience of New Orleans.
All right, okay. Let's bring up our second chart, which shows the quite dramatic decline in bank lending to businesses in Europe. The question is, of course, do you think that issuing more ABS could help reverse this and get that vital credit back to business?
Absolutely it could. And you know, in Spain, for example, the two biggest financial assets that were securitized in Spain before the crisis were SME loans. Some were government guaranteed, some were not government guaranteed, and residential mortgages. And also in Europe as a whole, we know that the European authorities are very, very focused on ways to try and channel more finance to small businesses. We are over-dependent in Europe, as you know, on our banks. Only
this is
something like
70%
of our financing comes to the banking system.
But the question, of course, whether the demand for these loans to bundle up in the first place, if there's not the demand for.
Well, you know, I think there is historical stock available, and in terms of demand, I'm not really an economist, so you know, I couldn't really speak to you too much about that. But certainly, their securitization can only help by providing an additional financing source for SME pools on banks' books. And also the other important feature of securitisation that has been overlooked a little bit in the last few years is its ability to enable banks to manage their capital base as well and transfer risk off their books.
Richard, thank you very much. So an opportunity there for Europe to revive lending to the private sector, to companies, by allowing banks to use asset-backed securities on a much larger scale. But it's going to require regulators to rethink their mindset a bit and not think about ABS as something dangerous that might blow up, but a positive tool for encouraging economic growth.